demand.
Does that also perhaps give an opening to all of these Chinese companies, despite the fact that we are seeing these export restrictions and the increasing rivalry between the US and China?
Otra vez.
AI, it is the technology of the future, and it is important to both the U.S. economy, U.S. security. So it's a major focus, and he's putting a lot of resources behind it, including, look, the investment that he's made in NVIDIA and other data center infrastructure. So this is a very powerful competition that the U.S., I believe, will win.
Ivan Feinseth, really good to have you with us,
That's right.
CIO at Tigris Financial. And take a look at some of the stocks that we're watching when Japan opens shortly. SoftBank will be in the spotlight, in part because of its exposure to the AI trade, and also because its biggest investment arm holdings saw big declines in after-hours trading. The chip design company's results point to sluggishness in the smartphone industry, overshadowing a lucrative push into data center technology. Also watch chip testing equipment maker Advantest. We saw its ADRs rise in the U.S. session after it raised its full-year forecast well above market estimates. The company touting continued strong demand from the AI boom, Heidi.
Yeah, we do have some breaking news, Sherry, when it comes to Sony at the moment. Just some breaking news with Sony approaching Tamron with a 200 billion yen offer. This is a lens manufacturer with a buyout proposal of around 200 billion yen, according to reporting from Diamond Online, citing an unidentified report. But we are now hearing that Japan's Tamron has received that non-binding takeover offer from Sony. So we'll be watching that very closely. The approach reportedly was made back in January. We haven't had comments from neither Sony nor Tamron at this point, but we'll bring you more details as we get them, Sherry.
Right, Heidi, and still ahead, South Korea tightens curbs on leveraged ETFs as it tries to stop a rout that's wiped billions of dollars of investors' holdings. We'll have the details next. This is Bloomberg.
What up, y'all? It's the KRISTOPHER. It's the KW podcast. If you're new here, this is a podcast where we talk about the financial markets, provide trade signals, and just update on what's going on. Now, if you would please, we're never too busy for referrals. Like and subscribe, get that out of the way, because at the end of this program, you're going to be probably motivated to take action on some of the ideas you get from this. So let's just dive in here. See how the markets ended up today. Red. Yeah, I said add to the trade in the last one, but nothing has changed fundamentally. The big picture is still the same. So just buy the dip, basically. Buy the dip. Here's a 5-day. Now, we had some pullback too, but that's the thing. You got to learn by rolling with the punches. You know what I'm saying? Let's see, 5-day here. So, okay. Here's yesterday. Today's the 29th. We got 15 minutes until the market opens. It's 7:45 in Beijing, China right now, and 12:45 a.m. London time. So, okay, yesterday we had that drop initially, okay? And it doesn't make sense. So today's the 29th, right? Yeah. Okay. Yeah. All right. This was the initial drop. That was from the oil escalation. Iran started to come back, and then we had another dip here, and then looks like it's been ramping up here. When you see something like that, that's a buy signal. That means that a big buyer came in and it ramped up all those bid orders for that minute. It's a huge market. It's like 10 trillion daily volume. So even though it's a small blip, that could have been a massive whale trade. And if we look at the daily chart too, see here, we're still. Oops, dang it, undo that. Son of a gun, I lost my marking there. It was about here, close enough. Auto, turn off the auto. All right, we're looking at the breakout trade. Remember, I did say this, guys. It's gonna bounce around in this handle here. I put the handle between here, but that's probably. Let me just come down here. My drawing handle, though, look, see the blue here? The drawing handle came down to here anyway. So yeah, which matches about here. It's going to bounce around in here for a while. You can see in the yellow where I said that. So, expect some volatility before it breaks up to the upside. It's going to be choppy as hell. They call it chop in trading. Chop. It's like, there's a current under the water, but the waters are calm, but they're kind of choppy. You get the point. Okay, let's check on Bloomberg, find out what the deal is.
Caps will be, or how much trading costs will increase. So while the direction is somewhat clear, the effectiveness will depend on the details.
We've got green futures. That's
Bloomberg
good.
Deputy Seoul Bureau Chief Hee Soo Lee there with the latest on the volatility.
Otra vez. I don't know why it always does that. Try to blow it up. Come on. I was going to drink my coffee while we watch this. Well, anyway, nothing's changed. We've seen more escalation, but it's already priced in mostly. The oil looks like it's starting to finally stop its ascent. 5-day chart for oil. Look, it dropped. We had a nice drop there. When did that come into play? That must have happened right before the close. See how rates are looking here? United Kingdom was down 1% yesterday. Look at that, up 2%. Fed rate decisions seem to be pleasing the markets. No major moves in the currencies at all. Look at the small percentages, 0.02, 0.01. That's why it takes 50-time leverage to make money sometimes. But when you have a big move, it really amplifies. That's why I say use an ETF at 3 times leverage. That's enough. That's enough TNT. Okay, 50 times. Oh Lord. Even 20 times in the option that's a lot. It's crazy, man. Hey, your odds go up so much when you use that type of leverage of failure, of entropy, as the physicists say. In a system, you have entropy. Well, the entropy likelihood factor, coefficient, probability, likelihood, whatever you want to call it. Dang it, I'm blabbing here. We got 10 minutes. What in hell? One Sam Hill. This coffee is amazing. Circle K has this Colombian coffee, grind it fresh there, with like every single creamer you think of. It's like great. I mean, when it comes to coffee, like gas station coffee, you go any time of the day, and you get like better than Starbucks. Okay, I don't know. That might be an exaggeration, but pretty damn good. I mean, like, especially for the price. Come on. Killing me, Smalls. I might have to log out and log back in. All right, I'm gonna have to put this on pause for security purposes. Be right back, yo. And we're back.
The latest from the corporate front now, and the Pentagon has
Got
awarded
5
major
minutes.
defense contracts worth billions of dollars as the Trump administration works to boost weapons stockpiles drained by the Iran war. Lockheed Martin won a $59 billion deal to sharply expand Patriot missile production. General Dynamics and Huntington Ingalls secured contracts worth close to $76 billion for nuclear submarines and upgrading shipyard infrastructure. Moonshot AI has secured a $35 billion valuation after raising $3.5 billion in a financing round. Sources say that's far more than the Beijing-based startup was aiming for as it rides on the success of its breakthrough Kimi K3 model. The company is now seeking funding at a $50 billion valuation, aiming to secure capital before an IPO in Hong Kong as soon as this year. Starbucks has raised its full-year outlook after quarterly results topped estimates, suggesting that CEO Brian Niccol's efforts to win back customers with faster service and new products are gaining traction. The coffee chain posted a fourth straight quarter, I should point out, of comparable sales growth. The company says results reinforce confidence in its growth trajectory. Adani Enterprises has posted a net loss of $121 million for the 3 months ended June 30th, compared with a profit of $93 million a year earlier. The loss stems primarily from exceptional charges linked to the resolution of U.S. sanctions investigations. Revenue for the same period surged 50% to about $3.8 billion.
And Heidi, we're waiting for the market opens in South Korea as we're watching Samsung Electronics. They just announced their full results, their second quarter net beating expectations, coming in at 71.2 trillion won. And a big chunk of it was their second quarter chip operating profit. The chip side of things, 62 billion US dollars, leading to the broader overall profit at being more or several times more than the June quarter a year ago. So the chip division really accounting for most of it. Samsung saying that it expects chip demand to remain strong in the second half, and they expect the overall earnings to grow in the second half as well. Of course, Samsung, huge market weight on the Kospi, together with SK Hynix. And remember, SK Hynix also had a six-fold surge in quarterly profit, but their stock just plunged in the previous session. So we're seeing right now the setup, which is for more downside in today's session. You can see even Nikkei futures pointing to some downside today. We continue to see the yen stabilizing near multi-decade lows, but we're still headed towards that Bank of Japan policy decision on a very busy week, right? I mean, we just had the FOMC holding for a fifth straight meeting. We're still digesting also big tech earnings. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg.
Yep. FOMC held. The FOMC, the new pick, that's the Federal Open Markets Committee. That's the Federal Reserve's committee of central bankers who decide on the interest rates. They have the dot plot. The dot plot projects how they see interest rates in the future. They can be described as either dovish or hawkish. Dovish, rates down. Hawkish, rates up. Period. Don't confuse it. People you ask them, what does hawkish mean? Well, let me tell you, depends on what the word hawk is. You see, hawk starts with the word starts with the letter H. H comes from the English dictionary. You're like, oh Lord, just tell me what the hell hawkish is, you know. But hawkish is an attitude that interest rates are going up. It's a belief. At the end of the day, if categorically it falls under the belief category. So hawkish is you believe that inflation is going to go up, so therefore you believe that rates are going to go up. If you're dovish, you believe inflation's going down, so you believe rates are going down. A hawkish central banker would be biased to the upside on rates. So that's called qualitative analysis. So it's still analysis. It's still a math equation. It's just you're doing it analysis of the opinion. So you got to categorize how hawkish they are, and so you got to establish your own baseline, your own point of reference, your own constant in the equation. And how do you do that? That's the difficult part. It takes experience usually, or a good advisor, or watching my show. No conflict of interest there, of course. But I'm the spotter at the gym. If you're new to this or if you've been doing this for a while, I look at what other experienced traders, advisors do, make sure that I'm not missing something. But even retail traders, so there's some really good retail traders, and they need a point of reference, especially if you're individual trader, because you're like a one man island or one woman island or one whomever shoot these days. Whatever the case is. uh, I hey, oh, what's my pronoun? I identify as a trader, and not a traitor as in like go against your country. Actually, I'm a patriot. Suffice to say, but I'm talking about trading, currency. But anyways, that's it goes without saying. I'm getting off subject here. I'm just bullshitting, y'all. Trying to put some fluff in, but here we go. All right, y'all. It's the KRISTOPHER KW podcast.
This is the Asia Trade. We're counting down to Asia's major market opens, and Heidi, it seems the narrative hasn't changed this week. We're still watching central banks, a little bit more clarity coming from the U.S. with the FOMC holding for fifth straight meeting, but they have three dissents that wanted a hike. And of course, we continue digesting tech earnings, not to mention the latest Iran-U.S. tensions.
The themes are the same, but certainly the intensity has really ratcheted up, right? Whether you take a look at this reignition of hostilities and the war, these questions over potential policy missteps, but certainly dissent at the Fed, but also when it comes to these Asian markets, particularly for Korea, where to next after the fast and furious selling of the past 2 days?
Yeah, lawmaker in South Korea calling the country a casino now. But take a look at how Japan is coming online first, because we are headed now towards a Bank of Japan policy decision. We have the FOMC out of the way. Right now, the expectation is for a hold for the BOJ. Of course, we continue to digest more inflation numbers in Japan as well. We're seeing some price pressures. We will be watching the JGB space very closely. We continue to see that downside pressure, and the fact that potentially we could get a food a food consumption tax cut here in Japan, which reports say the government is now debating. That could lead to perhaps more upward pressure when it comes to yields, according to analysts. The Japanese yen still holding at that mid-163 level, still around the lowest levels against the U.S. dollar in 4 decades. But we're watching the tech sector very closely, right? Because we had big tech earnings, hyperscalers, the likes of Meta, the likes of Microsoft, really diverging reaction from investors. Take a look at how South Korea is faring, because despite the fact that we were watching hyperscaler results, the consequences might be bigger for these supplying companies like Samsung, SK Hynix. Of course, their capex affects how they sell this year, for example. And we just got Samsung earnings, and the results were broadly to the upside, beating expectations. But remember, expectations are so high already that you saw SK Hynix with that 6-fold jump in profit, and then you saw the stock plunge. And in fact, even in today's session, is down more than 2%. Samsung seeing a 1% gain. And this stock has been so volatile, right? I mean, it's up about 70% this year, but it's just crashed since the June peak. And it's not just Samsung and SK Hynix. This really has an impact on the broader South Korea market, right? The Kospi, I mean, 2 consecutive circuit breaker triggers. That has been unprecedented for South Korea. So there's a lot of alarm within the country right now, Heidi, on what to do with this volatility.
volatility when it comes to the Treasury space as well, right? In fact, there's an argument that what we're seeing from the Fed, that the level of dissent, the expectations now being set up for the next meeting, really setting up the broader US bond market for further rallies. But certainly none of that is more evident than when you take a look at the long end of the curve, the 30-year yield soaring to the highest since 2007. So almost 20 years ago, we saw these levels. Rate swaps reflecting roughly 60% probability that FOMC officials will boost borrowing costs to come that September meeting. So, despite that dissent and clearly what Fed Chair Walsh referred to as a good family fight, it did give some sense of clarity to what has been a deeply divided Treasuries market in terms of where that inflation outlook is headed to next.
We had a negative yield curve
Take
for
a look
a while.
at Brent. We are seeing a little bit of softness there, pullback. This despite, of course, these ongoing concerns about what next when it comes to the US-Iran war. We've heard Axios reporting that there's been another night of strikes being resumed from the US on Iran. President Trump saying that the US would strike Iran hard. He's actually also in a tally rally made references to, we'll finish them off
FAFO, y'all.
But it's very clear that when it comes to this particular conflict, as well as the
I don't think anyone wants it, but I mean, what else are we going to do?
Increasingly
they just keep on going. They keep on fighting.
Watching Australia, the ASX muted start to trading.
Keep on tapping ships.
About 0.3%. We'll be watching the likes of Rio Tinto after those numbers came out through yesterday.
Bullshit.
Of course, in the thick of earnings season here as well. We also did have those comments from the RBA, Sarah Hunter, really warning of the need for the RBA to not let inflationary expectations become de-anchored in the longer term. And of course, that concern about sticky inflation expectations.
That means that they're not worried about oil. That's what it translates to.
That decision to hold, Fed Reserve Chairman Kevin Walsh has reiterated that the Fed remains committed to delivering price stability.
Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch.
Finally, a new Fed chair.
Bloomberg Economics Chief US economist Anna Wong joins us now for more. So I guess the question is the dedication to price stability, the dissenting votes, the concern over de-anchored inflationary expectations, what we're seeing in dissenting votes, the concern over de-anchored inflationary expectations. What we're seeing in the Treasury markets clearly reflects some of those investor concerns. So why didn't they just move at this meeting?
Committed to price stability. I mean, it's getting inflation down.
So I think that Kevin Warsh ultimately decided he will not favor a hike today, basically because he's waiting for the task force assessments of how one should think about inflation. He had several times expressed frustrations about current status of inflation measures. And for example, the Bureau of Economic Analysis is due to announce some major revisions to core PCE deflator come September. So I think Kevin Warsh basically wants to wait until September. And so September will be definitely a live meeting for a rate hike. And I think the market's reaction today is basically calling Kevin Warsh bluff on his determination to deliver the 2% inflation.
Whatever.
We are not just contending, of course, with some of those domestic inflation pressures. There's, of course, the ongoing war and the threat over global energy supplies and oil prices. There's Trump trying to rebuild his tariff wall as well. How does this feed through to how big a threat it is that perhaps this inertia or this choice to wait a little bit too long is going to be a policy mistake?
Yeah, so in terms of the new tariff war, our trade team estimated that the new Section 301 and 338 will only boost effective tariff rate by 0.1%. So that's basically an effective tariff rate of roughly 10%. That's still lower than before the IEEPA ruling or than last year. And also, our team has looked at the tariff pass-through, and we estimated that the most of it is already over with. And looking forward, whatever inflationary impulse remains in CPI is not really attributed to the tariff. So I think the Fed was correct to keep on hold today. I think the mistake is that Kevin Warsh didn't really explain very well why he paused, and furthermore, he didn't explain what are the criteria for the Fed to hike in September, and as a result, the long end of the bond market just revolted.
Bloomberg Economics chief U.S. economist Anna Wong there with the latest on the Fed. Let's bring in Ken Wong, Asian equity portfolio specialist at East Spring Investments. Ken, really great to have you with us. I mean, we saw the volatility in the U.S. market, not only reacting to what the Fed did, but also to all of these big tech earnings. The fact that we have AI-fueled demand, but at the same time, this concern about the AI infrastructure build-out, how does that bode for Asian markets when we continue to see this on and off sell-off?
It doesn't bode well.
Yeah, I think the fact is that suppliers are generally seeing quite a bit of profit taking this month, as expected. Now, overall, when we look at whether it be it semiconductor companies, whether it be it memory storage companies, or even electronic components companies, nobody has actually been immune to the sell-off. But generally speaking, for us, when we're looking at the Asia tech market as a whole, we feel that electronic component makers still do have better opportunities, because when we look at going forward, whether it be it ASPs, whether it be it specifically margins, because of a lack of competition for electronic components, there's going to be pockets and areas where now we would expect for some investors to really start to bottom fish and start looking for some opportunities, especially given the correction that we've seen so far in July.
But you're actually underweight when it comes to semiconductors and memory. Why?
Yeah, the fact is that we've been underweight semiconductor as well as memory now for the last 6 months. Overall, in our view, we think that electronic components are actually the better way to go, because generally speaking, when we look at the average sales price, or specifically when we expect for overall margins, we expect things within the semicon as well as especially within the memory space to gradually start to weaken. The fact is that there is going to be a lot more excess capacity, which is going to be out in the marketplace, especially in 2027. The fact is that yes, while we are continuing to see a rise in, for instance, DRAM or NAND memory prices. Generally speaking, when we look at the change in terms of the overall rise in prices in memory, especially into 2027, that is probably going to soften a bit more. And this is why you're seeing that sell-off right now, in particular for July, especially when hyperscalers are, potentially going to have to reduce specifically some of their AI CapEx spends in 2027, potentially. Then there's going to be actually a notion in terms of what we're going to have to look at in terms of opportunities. But with that said, we're looking at changes in terms of the delta, not necessarily overall decline in AI CapEx, but maybe not necessarily growing as high as optimal as earlier expected.
Okay, does that mean then that when it comes to regions, you would prefer, say, Japan, where we have lots of electronic components makers, as opposed to South Korea, which is dominated by these semiconductor makers? And if so, what would the implications be of the BOJ continuing to tighten? How do you position this week?
Yeah, overall, Japan and Taiwan are key areas when we talk about electronic component makers. The fact is that the competition for electronic components, especially amongst global competitors, is definitely not as heavy as what we see with semiconductor as well as with memory. Now, ultimately speaking, when we look at what's happening with central bank policies, I think, specifically what's happened with the Fed earlier today in terms of not raising interest rates, that does help, because there was a notion that if the Fed was going to raise interest rates, that would have an impact in terms of potential AI CapEx decline as a result of a rise in interest rates. So at least we get that out the door in terms of, well, the Fed is on hold at least for one more time. So potentially, we might not necessarily see the weakness. I think more importantly, what's going to be important is more guidance from companies, not necessarily just from hyperscalers, but also from traditional companies. And overall, in terms of their second half, and more importantly, into 2027, what's going to happen with their AI CapEx as well? Because we know that hyperscalers and other tech companies do spend quite a bit when it comes to AI CapEx. But generally speaking, traditional companies are also spending quite a bit now on their AI CapEx. And it's going to be interesting to see, specifically with what we're seeing, whether or not we're going to also see some potential pullback in terms of AI CapEx from traditional companies.
Ken, how big is the oil variable in markets like Japan, where they're very dependent on Middle Eastern oil, but not just oil? We're talking about petroleum byproducts as well that go into all of these factories, including, of course, component makers.
Yeah, and that is going to be something that we're going to have to carefully keep an eye on. The fact is that from our point of view, we still see higher oil prices, at least for the immediate future. Now, even regardless of what's happening in the Middle East, whether or not we do get an agreement, the fact is that higher oil prices is here to stay, at least in the near term. So I think a lot of companies have to price this in. And ultimately speaking, not have the notion that potential oil prices can go back anywhere near where we were, let's say, in January and February. So this is going to be something that's going to be very important, and higher expectations in terms of inflation. And companies will have to actually, provide specifically or have better guidance in terms of what they're going to be doing because of the rise of higher inflation.
When we talk about usually the tech sector and semiconductors, anything related to the AI trade, e-commerce, we just group China completely separately because of their idiosyncratic stories and how they're isolated, perhaps in a way, because of these rivalry and competition with the U.S. Is that also a market that you would look into, especially when it comes to electronic components?
It is, and the fact is that electronic components is one area. So we see specifically in areas like PCB, substrates, transceivers. There's a lot of companies in China that's also a lot of opportunities, especially within the China onshore market and also in Japan, where industrial companies do have quite a bit of advantage, especially when we get to this next stage of AI development with physical AI.
Physical AI.
Enough to offset some of those macroeconomic fundamentals and weakness that we're seeing, whether it's in the Chinese economy, because we've been talking about the property sector forever, or here in Japan, where you continue to see a crumbling Japanese yen having an impact on households.
Yeah, there's going to be a bit of a balance. The fact is that, yes, while one part of the market, in particular right now, in terms of AI capex, in terms of specifically the electronic component makers are doing well, there is a lot of other companies out there in the marketplace. But I think we have to take a step back as well, because given the recent weakness that we've been seeing across the board for anything tech related, we're gradually seeing some of the flow heading back into more some of the traditional companies as well, which has benefited. So I think, there's two sides of the coin. So there are opportunities, especially when it comes to some of this pullback. But I also want to address the point that we saw similar pullbacks within the tech sector in 2025, especially during that March 1st to up to Liberation Day, where a lot of tech stocks and generally tech markets as a whole dropped anywhere between 25 to 30% as well. But by the middle of June of 2025, those losses were made back as well. So we have seen something similar last year as well during that March up to April 10th period.
Yeah, we'll keep that in mind. Ken Wong, really good to have you with us and your perspective, Asian equity portfolio specialist at Eastspring Investments. We have more ahead. This is Bloomberg.
All right, y'all. Let's wrap this up here. Okay, so we had the Fed rate decision today, and Kevin Warsh, the appointee by Trump, was expected by the betting markets not to raise interest rates, to leave them unchanged by 2/3. So that came to fruition, and the analyst we saw before the interview just now was saying that she was citing a revolt in the 30-year Treasury. So you've probably seen the yield curve where it goes up. So short term, like at the very small end of the curve, you got money markets, you got treasuries, you got notes, you got 5-year Treasury notes, you got 10-year, 15, and then 30. So that yield curve is what all the loans are based on in our economy. So, for instance, here you go to interest rates. You can see here the 10-year Treasury for the United States. You got Germany's 10-year Treasury, United Kingdom's, Australia's 10-year Treasury, Japan's. Why did they use 10-year, one may ask? Because it's in the middle of the curve. So that's the benchmark, the standard benchmark for this kind of measurement. Yeah, so let's look at interest rates over the last year. They've been on the rise. That's been mainly due to the inflation from the oil. You can see it started going up right about when the oil conflict started happening. So if we go, so you see the link between oil and then interest rates. It's because the inflation, the oil causes the inflation, which forces the rates up. So you can see about mid-year. So we're looking at a year chart on crude oil. Mid-year, you can see the oil elevated, and then it's been on a downward trend since. Now go back to rates. You look at 1 year. You can see right about here, same point. So oil here, rates here. See, spot on. So that's the threat. That oil rates, all that affects this guy here, the NASDAQ. So this is for the last year, the NASDAQ. You can see right about that same point, NASDAQ had a launch, but that was due to good earnings from the AI trades. But the oil, despite their earnings, I think we had a 550% earnings reporting on SK Hynix yesterday. I mean, it didn't meet expectations. I mean, isn't that enough? Jeez, it was still up pretty good. But you can see here how the trajectory, that's how they say it in Asia, is it launched and then it just got muffled here, and then it's been on a decline. That's just the oil wreaking havoc. Why the NASDAQ? Like technology oil, is because NASDAQ has the the magnificent seven, these big AI companies, and part of the reasons why, part of the price of these companies reflects their ability to issue bonds, to raise capital, to invest into more data centers. If the rates go up, it makes it harder for them to borrow by issuing bonds, and so the price of the NASDAQ goes down. That's how it works. So you can see how the oil just trickles into everything. You know, it's the Achilles heel of our entire global economy. The oil price hits here, then it hits here on the rates, and then it hits on the stocks. So the longer this skirmish, this debacle, this war with Iran continues, the more the oil is going to be up, the longer it's going to be up, and the more it's going to put pressure on the rates, and that then puts pressure on the global stocks. So I mean, Iran, like, they're trying to, use that oil bottleneck as their leverage, and all they're doing is just upsetting the powers that be throughout the globe, and that is not sustainable. So plus, I mean, what more damage can be done? I mean, they've already been bombed like crazy. Trade routes have already logisticized. That's not even a word. The logistics have already sorted out mostly. So, I don't see. I just don't see it becoming. And the worst has happened. It's been priced in. That's what I'm trying to say. So my call here is just to watch your trades. If you don't have time to watch them, then I would consider getting out altogether. Like I said yesterday, last time, and then putting a buy stop order above the resistance level that we suggested here. But see, these are longer term trades. We're not trying to day trade these. These are swing trades. And swing trades can last a couple weeks. They can last over a month. And but chances are, if you're patient, then you're going to do well. Remember the daily chart here, guys, on the so remember the cup and handle I got here? It's kind of hard to see. There's a blow it up a little bit here. So here's the cup and here's the handle. So you can expect this price action to bounce around in this handle for a while. So we've had to come down, but I expect it to rebound up to here. It's going to be a microchasm of this right here. So markets are natural. They work on the Fibonacci sequence. So this whole area here, you got 1, 2, 3, maybe 4 here, but definitely 3. So that 3 we see here, we should see on a smaller scale here. So here, hold on, like that. Oops. So these 3 right here are a smaller fractal of this. That's my point. So this, I expect it to repeat now, and then up. As long as nothing, as long as, save that. Save your work, folks. As long as nothing happens, with the Bank of Japan, they don't try to intervene. Now we saw in the news just now that the Bank of Japan expected to keep their rates on hold this Friday. So, pay attention to that because they like to surprise with their intervention. That when I say intervention, whenever the Bank of Japan the currency starts getting out of hand, they come in and they bid up their currency. They go and buy a bunch of JGBs, and which push up the currency. That's their bonds. And so watch for that this week, especially. And then watch for continued escalation with Iran. And so the baseline now has just been regular tit for tat fighting. They attack a base, we shoot down one of their infrastructure venues. It says, they shoot a ship, and then we come in, we hit something else, and it's just been ongoing. That is now the norm baseline. So if you see some of that, chalk it up to noise because that's basically what's been happening. Watch for something major, like they I don't know, a major explosion, like they hit a nuclear bomb, or I don't know. That would just cause a global catastrophe. But I don't think that's going to happen. I mean, just something big, like a major escalation of sorts. But if not, then expect it to break out of that little teacup handle range. This cup and handle range. It's so typical. The market runs up. People start taking profits here, and then I thought the cup and handle was here at first, but now I took it to here. It just keeps on getting smaller and smaller. So this would be the bigger here. So we went from this area to this area, not to this small area. So these keep on getting smaller. So the negotiation is coming to a point. It's like a negotiation. Each side goes back and forth, and then the scope gets narrower and narrower, and then it comes to a tipping point, and then it goes one way or the other. And so the fundamentals are just too much to keep this resistance level, is in my opinion, as long as nothing changes in the status quo. So when we're on these trades, we're watching for anything that's going to change the status quo, and then we reassess our theory to see if it changes the projected outcome. If it doesn't, then we don't let pullbacks in the short term derail us from the overall trade. we hold our ground. You got to know when to hold them and fold them, though. Hey, this guy's good. Let's hear what he's got to say real quick.
Measure, but there've been no reporting of that. So to a US measure, but there've been no reporting of that. So it almost looks like this sort of the hard alliance side in Iran is sort of wanting to keep the whole process going, which makes life very, very difficult.
Oil's down,
for President
though.
Trump,
Look,
because
it's
obviously is pretty keen to extract himself from this and find a way to get energy supplies flowing again. So yeah, really interesting.
And we heard Trump speaking at a tally rally in the last hour. Still sounding quite buoyant, saying that we're going to hit them hard. We'll finish them off soon. Operationally, I don't know what that means.
Yeah, I mean, look, there's a lot of rhetoric, isn't there? And in a sense, it's a test of it's a real test of wills here. Bravado on both sides, definitely from Iran's side and from the IRGC, that they can take this and they can keep it going. And from President Trump, that he likes to be the man, and he these sort of things he won't accept. And you could just see that this is a provocation in so many respects. They know that they're going to get a response from him. What's interesting also is we've obviously had a bit of a widening of this too, with Saudi Arabia sort of joining the fray with these strikes in Iraq as well. So, yeah, it does seem like this is going to drag on for a bit of time now.
Bloomberg editor Michael Heath there. More ahead here in the Asia trade. This is Bloomberg.
All right. So, there you go. Just as I was saying, this looks like it's going to continue on this tit for tat. And the interview from Wong earlier, he was saying that he expects oil to climb back up to $90, $100 a barrel. So that would be a 15% increase from $85 a barrel we're at right now. And so that 15% could equate to it could equal about the same amount of downside in the NASDAQ. Because remember earlier we're talking about the NASDAQ is affected by the interest rates. We said, okay, here it starts with the oil, then it hits the rates, and then it hits the NASDAQ. And so he said, we saw last March that it was down some stocks as much as 25%, and that he hints at a correction. So that when the price gets past the fundamentals, it corrects back to its fundamental price based on normal metrics. So looks like Trump is still ratcheting up the rhetoric at his rally, but that's good. Come to expect from Trump. Last thing I want to talk about before we wrap this up here is you see this right here. So the chart kind of tapers off right here, and you see this red line that goes down. That is called average true range, or ATR. And the ATR comes in handy when you're trying to measure a range-bound market, or how much a trend can move in one direction or the other. Past doesn't guarantee future performance, but it gives you the range. So we're looking at a daily chart here. You can see, remember how I was saying the circles keep getting smaller, smaller, smaller? Notice the range keeps getting smaller. So, last time, let's see, scrunch this up a little bit here. Last time the range got low relative to history, if we go back, it looks high from here, but you see it flatlined for a long time. So relative future, and then the drop, there was a spike. So this will move up, whether it's an up move or a down move. It just measures move in general. Okay, but see here, after such a move, then we had a nice run, and then it smoothed out. Looks like there's a small correction here, and then another smooth out. Correction here, another smooth out. Same here. And so we're due for another big move. Whether it's to the upside or downside, that's hard to say. But the fundamental, the charts, so in summary here, the charts technically are indicating a big move is going to come. Fundamentally, big picture, the current is to the upside, the overall current. So if you're patient, you could reap the benefits from a nice upside breakout. And the AUD JPY is a proxy for the overall stock market. So a lot of these other trades, and these are broad trades like TQQQ is NASDAQ triple leverage, or CWEB is the Golden Dragon Tech Index in China, double leverage. I even suggest Bitcoin, like proxy, like hashtag or MISTR, which is a MicroStrategy, just to name a couple there. And I'll link my prior video where I list them out pretty concisely. But that's it, y'all. Don't forget to like and subscribe. This is KW Podcast signing out, and I'll see you in the next one. Hold up. Let's hear what he says.
A stock trading higher, and that is going to calm some nerves, especially given how big Samsung is as part of the MXAP. But under the hood, there continues to be this big single name idiosyncratic risk around results. We had that in Europe, we had that in the US, and we're going to come back to that in the Japan trading session as well. You continue to see this kind of bifurcation between the smaller chips, the kind of simpler chips in the MLCC or passive component sectors moving around a lot, and that has set up Taiwan for a very interesting session. You see Taiwan margin balances came off very sharply yesterday. They continue to fall. They have been falling for about a month or so, and that's going to be very interesting. When does Taiwan regain its kind of
Asia's nice and green
investment kind of bullishness, or will those kind of
futures
subsectors
are green
underneath TSMC continue to suffer these big drawdowns? That sets the stage.
Rates are normal.
This is a
kind of high.
It's a very specific
Germany
kind of component that
kind of jumped up there.
Continued large sums
remember,
to be invested in data centers to justify its valuations. So it's going to be very interesting to see how that trades in Hong Kong today.
Not much movement
here.
here.
Especially given that it's the biggest public debut in 7 years or so. How big is the excitement right now? Not just in Hong Kong, but across Asian markets around anything related to artificial intelligence.
Yeah, and you raise a good point, right? Like it's the calendar of capital raising is extremely robust, but now we are getting a kind of a question on the demand picture, the results picture of these stocks that are already listed. So what that does to the calendar in the weeks and months to come is going to be very interesting. Does pricing move? Pricing has been quite aggressive here on the debt side, especially, but equities as well. You saw some really good gains from IPOs. Does that trend continue? And does retail, having taken these huge losses across the US?
They're just talking about AI. Anyways, wrapping this up for real. Don't forget to like and subscribe. KW Podcast signing out. See you in the next one.